So folks, welcome to VRD Nation. This channel is dedicated for stock market investors and traders, where we explain complex stock market concepts in a very easy to understand way so that anyone, any beginner can easily understand them and apply them in real life. So if you are here for the first time, if you are watching this video for the first time or this channel for the first time, I would strongly recommend you to subscribe to the channel so that you can also take advantage of them. Now, this particular video is the video number 3 in the series of videos that we have been making on the expiry day strategies. So if this is the first video that you're watching in this series, I will recommend you to go back and start from the beginning, because in the first video, we have explained the strategy itself, and the subsequent videos have basically been the practical application of that strategy in real life, right? So start from there, and this will make a lot more sense once you understand the strategy. So today was a weekly options expiry for Nifty and Bank Nifty options, and this is how the day ended up being. And I will talk about how the day went, but there is one thing which I want to say, that when I was growing up, I had a math teacher, and he was a very strict teacher, but he also was very intuitive. So at any point of time, he felt that his students did not understand the concept, right? He would not move on. Even if we say that we understood the concept, he would look at our faces and he would know that we did not understand the concept. So he would stick to the topic and just doing more and more questions, more and more examples, up until the point that we will crystal clear in our concepts. And so looking back, I'm very thankful to have a teacher like him in my life. And it is because of him that even till date, if somebody asks me an integral calculus question, it's a very high probability that I will be able to solve it. So I had some very good teachers in my life. So the one thing which I learned from him is that understanding a concept is one thing, and applying that concept in real life is completely other. And the only way that you can learn a concept is to just keep doing again and again and again and again till our mind absorbs that concept, internalizes that concept. So that is what my intent is for making these videos, because the concept has already been explained in the first video. But these are the videos where I will be again and again showing you guys that how that strategy is applied in the real life context. So having said that, let me just talk about the market itself today. So today, the market pretty much did not do much. So this is like one of the best markets to trade for option sellers, because you don't have to deal with very volatile markets. So let's take a look at the daily chart of Nifty first. So what is Nifty doing right now? Nifty is not doing anything, right? So Nifty is basically in a broad range of 14,500 to 15,300 something. And within that range, sometimes it gaps up, sometimes it gaps down. So it is basically reacting to the global cues. It doesn't really have any trigger of its own as of now. So today, when the market opened, there was a gap up, but the market did not see any follow through to that gap up. And it came down, and at some point it looked like that it was going to collapse. But from the lows, it basically bounced back from the day. And this is a very typical characteristic of a market which doesn't really have any triggers to go by. So the way I handled today was that basically from the morning itself, I started selling options. So since the market was weak in the beginning itself, I sold some call options. Then later on, I added some put options. Then I sold call options, put options. That's basically how the day went. And you can see that all the options that I sold throughout the day, they expired worthless, right? So that is the whole idea behind the strategy, is to find those levels in the market that we know that the market will hold on to. And by selling those corresponding options, we can pocket the premium, right? That is the whole idea. So today I made some 61,000 rupees with the help of applying this strategy. And the strategy again is not that hard to understand. The strategy was basically to just keep selling. Throughout the day, I just kept selling. There was one time where I had to cover my position, and that's the reason why I had to incur a little bit of a loss here. Even though eventually it came down to zero, but for some time it looked like that position was going to get me some trouble. So I had to cover my position there. But apart from that, the rest of the day, I sold these options for 116 rupees, 57 rupees, 108 rupees, 50, 60, 40. And at the end of the day, I bought them back at 1 rupee, 2 rupee, 1 rupee, 2 rupee. Like that, right? So this is how typically the game is played. You sell these options when they are high, and then you cover your positions when they come down to zero. Now, having said that, I'm sure that if you have watched the previous videos also, by now the concept has become very clear. But what I will do is I will take some questions which you guys have asked through email or through the comments in the previous videos. The first question is actually not really a question. It was more of a comment, and I want to address that comment. So the comment was that you were lucky on that particular trade that I was showing in the first video. Somebody told that you were lucky. And that got me thinking that was I lucky? And when I realized the market context in which I took the trade and the way the trade panned out, I think I was lucky, right? So I don't dispute the fact that I was lucky in that particular trade. But having said that, if I look back in terms of my previous history and in terms of all the trades that I take almost on a daily basis, luck basically has worked out almost in the same proportion as a coin flip would have, right? So 50% of the time I'm lucky, 50% of the time I am not lucky. So the question is, the 50% of the time that I'm lucky, of course I make money. But the real question is, what happens in the remaining 50% of the times when I am not lucky? That is what differentiates a professional trader from an amateur trader, because professional trader knows how to cut their losses when the losses are small, right? Like in this particular case, before they balloon into something much, much higher. So going back to that particular comment, was I lucky in that particular trade? Yes, I was lucky in that particular trade. But if you see 3 consecutive weeks back to back, we have made money from this strategy. Not just made money from this strategy, but almost in every trade we have made money, right? So it's not just about at the end of the day what happened. Every trade has been profitable. So it cannot be luck. This is the power of the strategy. This is the power of experience. This is the power of knowledge. Now, the second question that somebody asked was, why do you trade Bank Nifty and not Nifty? And the answer to that question is, I trade both. Now, what I've done is, in order to explain that concept, I have been trading Bank Nifty, because Bank Nifty has more strike prices. So you have more choices of, which options that you want to sell. But I do trade in Nifty as well. In fact, I prefer Nifty over Bank Nifty because Nifty is less volatile. And Bank Nifty, of course, is a little bit more volatile. The third question was, what was the capital that was used? So I can tell you from today. So the capital that I deployed was somewhere around 20 lakh rupees. I believe somewhere around 20 to 25, somewhere in that range. So that was the capital. And that is the same in the past 3 videos as well. So on an average, I deployed about 20 to 25 lakh rupees. Now, another very interesting question which was asked was, what is the catch in this strategy? And it's a very interesting question, because there is a catch in this strategy. And the catch is, how do you manage your risk? Remember, I said this earlier, that 50% of the time I will be lucky, 50% of the time I will not be, right? So the strategy itself is very powerful, but the luck also plays a factor. So the question is, the 50% of the time when the market starts to go against me with momentum, how do I manage my risk? So the catch here is that even though you are making, let's say, 23,000 rupees or 4,000 rupees, 19,000 rupees, 12,000 rupees, there is a probability that one of these trades will go rogue against you, and that one trade will eat away all the profits that you have made from the other trades. So the real trick here is not so much to sell an option and capture the premium. The real crux here, the real catch here is, how do you manage your risk? So if you do not know how to manage your risk, this strategy is not for you. And the last question that people asked was about, what is the success rate of this strategy? So this is one of those strategies which has a very high success rate. And as you can see, and not just in this video, but in the previous videos as well, most of the trades I took, they ended up in profits. So the success rate, if I look back for this particular strategy, is above 85%. But again, the real metric here is not the success rate of 85%. The real metric here is the remaining 15% of the time when I'm wrong, how much losses am I incurring? And if I can keep those losses small, in control, follow my position sizing, follow my risk management principles, then eventually this strategy is going to make me money. But if those 15% of the time I'm incurring, let's say, 2 lakh rupees or 3 lakh rupees or 5 lakh rupees of losses, then of course this is not going to make any sense. So the success rate cannot just be seen standalone. It has to be seen in the context of average profits divided by average losses. So guys, that's about it. I just wanted to keep this video simple, short, so that I can show you how powerful the strategy is and how this can be applied in real life. And I also hope that I was able to answer some of the questions that you guys have asked. So keep asking questions, keep giving us feedback, because we are trying to build a community of traders who can help each other out. And that's how we become better traders and better investors.